Hello, everyone. My name is Jordan, aka the Inner Circle Pupil. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. It will pop up immediately. ICT, if you see this, thank you for the education. And if you have any problem with my channel, please let me know. I'll happily take it down. That being said, this channel and video is for entertainment and my own learning purposes only. This is not financial advice. Please trade at your own risk. Now I want to go over I want to self-talk and back test for the 8th of February, which was Wednesday. I want to go over what happened here. Firstly, on NAS, and we'll go Euro and AUD. So on NAS, if I go back 2 days, okay, and this is Wednesday. So let's say that this candle wasn't here. I'd be looking for bulls. I'd be bullish simply because price retraced back into this range. So it created, ran out liquidity, retraced back into this range, was respecting this fair value gap, bull candle. So this next day I'd be looking for bulls. So I'd be looking for a buy. We drop to the 15-minute. We go over our setups. So once we got the daily bias, we wait for our time to trade. Since it's an index, we'd be trading 8:30 to 12. Okay. So Wednesday, here we are, 8:30 to 12. So I'd be looking for a buy, but it's very obvious that this whole um that this whole um session was bearish. And you could tell right away that it actually retraded. If you look to the left, there's liquidity up here, so there was no liquidity run, but there was a fair value gap right here. As a self-talk, I expected this to sell. I expected a bullish move. However, after noticing the 15-minute, I now expected price to retrade up into this fair value gap where we could potentially see a sell. So with that being said, I expected this. We drop to the 1 minute. Let's see if there was a market structure shift for an entry that we could have got in. We look here. Some move up. And then here's this market structure shift here. Market structure shifted and it presented this fair value gap, which came back and got retested. Other than that, there was no other fair value gaps. There's a small one here. The one candle was respected, but we'd be trading this one. So we set our entry and it'd be triggered in right here at 10. Our stop loss would go above the one candle, which is this candle, with a little bit of breathing room as per our steps to trade. Pretty much got it memorized. And we'd be targeting 1 minute liquidity swings lower. So this is our first swing that we would target. We would probably take all profits here, target low hanging fruit. So on NAS, we expected the sell and we won 1.78%. Okay. That is what happened on NAS. Obviously, it continued way lower than that. Excuse me. That is what happened on NAS. So I expected the sell. I anticipated buys, but I adapted and I sold. So as we go into Euro, let's see what the day was doing for Wednesday. Let me delete everything here. So the market is now closed, by the way. Today was Friday and it is 10 p.m. currently. So if we go to Wednesday, just replay just to take off these two candles. So right here, if we look at what happened prior to Wednesday, price ran out liquidity here, market structure shifted here. So I expected a selling opportunity as it continued down, and a swing low has not been made. We don't pick tops and bottoms, of course, but as soon as a swing low is created, we do anticipate price moving back into that range where there's this fair value gap that it can move back into. But currently I am bearish. So I will go into the 15-minute on Wednesday and look for a sell opportunity. So for Forex, we're trading 7 to 10. And prior to 7, was there liquidity that was run out? Major liquidity? Not really. There was actually a fair value gap that we traded back into. And I will actually notate this fair value gap simply because the one candle of this fair value gap was respected. And this is the one candle. Price did not run it. Yes, we tapped into this fair value gap as well, but I'm going to focus on this one. And as we go into 1 minute, we do want to see price trade away from that. So we drop from 15 to 1. And here we want to look for that market structure shift. Here's a little run of liquidity right here. Market structure shift. Here's the fair value gap. Got the displacement right there too. And you could see that it was violated. Okay, so our first entry would have came here and we would have lost. So let's just say -1%. -1. Now we're allowed to take a second entry, of course, but we will dial back our risk. So we will risk 0.5%. We are not risking a full percent. So market structure shift right here. There's 1, 2 fair value gaps. We will take entry off the primary, but we will put stops at the secondary. So entry here is 0.5%. And then stops above the one candle of the secondary, which will be right here. This is one candle of the secondary FVG. And targets will be right here, where we could claim partials. And then here's another one where we could claim more partials. And then there's more way over here. Right here, where we could either claim more partials or we could take full profits, or right here. Always take partials and pay the trader, of course. So let's just say we took partials here. We closed 50% of the trade. 1.43, we'd be up 0.5, nearly 0.75%. If we closed half of it, we'd be about 0.38%. And we'd leave the other 0.38% running. But if we close it fully, then the day would only be a negative 0.25% loss. So let's just say that we took low-hanging fruit, negative 0.25% on the day here. So on Wednesday, we would have lost 0.25% for euro. Okay, we dropped to AUD USD. Go ahead and delete everything on the charts. And then see what Wednesday was doing. If we delete these last two candles, which was Friday and Thursday, and we're focused here. So if this candle was not here, we've seen a market structure shift. Price ran back up into the fair value gap. I would be expecting for Wednesday a selling opportunity. I'd be expecting price to reject, give us an opportunity to sell here. So let's see, on Wednesday, 7 to 10, see what price did. And I can already see what price did. You can see here, that price ran a little bit of these equal highs. These are like relative equal highs. It ran out that liquidity and it actually ran into a fair value gap right here. Oh no, why can't my bar be connected? Wow. Okay, we're back. Cool. All right, so you can see that that's what happened right at 7 open. So we dropped to the 1 minute. We'd anticipate a sell. So right here, we're looking for the market structure shift on the 1 minute away from that fair value gap on the 15-minute. And of course, this is where we open. So this is the Judas swing. This is a false move. Here's the run of liquidity, the market structure shift, displacement, fair value gap. We are right here. Boom, boom. And then we'd go ahead and sell on this black candle. And then stops would go above the 1 candle here with a little bit of breathing room. So let's just say we put it at 4 pips. Boom. And we would target, first target here, this liquidity, where I will take partials at, where claim full profits was 1 and 2. Let's just say we claim full profits. That would be a plus 2% here. Plus 2%. Done. Very, very nice. They're beautiful setups. If we held that, there's a lot of liquidity to the left that we could have held into. And just continue to take partials, and we would have probably smashed out hella more percent. But we're just targeting low-hanging fruit at the moment for these back tests. In future back tests, maybe we'll go ahead and put together more, but we'll go ahead and keep taking notes from these back tests and go ahead and perfect our strategy so we could get funded in April, start our challenge in March. But